Hey, ladies and gentlemen. Thank you for standing by, and welcome to the Jiayin Group second quarter of 2021 earnings conference call. Currently, all participants are in a listen-only mode. Later, we will conduct a question-and-answer session, and instructions will follow at that time. As a reminder, we are recording today's call. If you have any objections, you may disconnect at this time. I will now turn the call over to Ms. Susie Wong, Director of the Blueshirt Group Asia. Ms. Wong, please proceed.
Hello, everyone. Thank you all for joining us on today's conference call to discuss Jiayin Group's financial results for the second quarter of 2021. We released the results earlier today. The press release is available on the company's website as well as from newswire services. On the call with me today are Mr. Yan Dinggui, Chief Executive Officer, Mr. Xu Yifang, Chief Risk Officer, and Ms. Shelley Bai and Ms. Celia Chen, Co-Chief Financial Officers. Before we continue, please note that today's discussion will contain forward-looking statements made under the Safe Harbor provisions of the U.S. Private Securities Litigation Reform Act of 1995. Forward-looking statements involve inherent risks and uncertainties. As such, the company's actual results may be materially different from expectations expressed today. Further information regarding these and other risks and uncertainties is included in the company's public filings with SEC. The company does not assume any obligation to update any forward-looking statement except as required under applicable law. Also, please note that unless otherwise stated, all figures mentioned during the conference call are in Chinese currency. With that, let me now turn the call over to our CEO, Yan Dinggui. Mr. Yan will speak in Chinese, and then our co-CFO, Shelley Bai, will translate his comments to English. Go ahead, Mr. Yan.
大家好，感谢大家参加嘉银金科2021年度第二季度财报业绩会议。
Hello everyone, thank you for joining our second quarter 2021 earnings conference call.
我们本季度实现了强劲的业绩增长，在运营或财务表现上创造了新的纪录。出货交易量同比增长153%，收入同比增长100.9%。这充分说明了我们在战略实施方面所取得的重大成功，使我们能够在推动国内业务有机增长的同时，通过完善的风险管理平台，进一步深化与金融机构的合作。
We delivered an outstanding quarter, achieving record-breaking operational and financial results as loan origination volume progressively increased by 153% year-over-year, with 100.9% growth in revenues. These results are strong testimonials to the success accomplished in implementing our key strategy, driving organic growth in China while deepening partnerships with financial institutions through leveraging our sophisticated risk management systems and providing individual customized solutions.
随着我们业绩的大幅增长以及有效的成本控制，我们持续保持着强劲的盈利增长，净利润同比大幅增长208.5%，达到1.27亿人民币。这一结果表明，我们有能力通过强劲的业绩增长和出色的执行力来提高盈利能力。
Notably, with the strong top-line growth and outstanding execution in cost control policy, strong momentum in profitable growth continues. Net income grew a significant 208.5% year-over-year, reaching RMB 126.8 million. This is a remarkable improvement and illustrates our ability to improve profitability through strong growth and outstanding execution.
正如我们过去几个财报会议中提到，我们一直以来专注于优化我们的自动化风控管理体系，从而进一步深化我们与持牌金融机构的关系。目前，我们的持牌金融机构合作伙伴数量已稳步增加到32家，另外还有45家正在沟通准备中。我们将持续扩大机构资金合作伙伴的数量，在保持高效的风险管理的同时，使我们的资金来源更加多样化。
As shared with you in the last few quarters earnings calls, we are focusing on building integrated, highly automated platforms with great risk management intelligence to be an irreplaceable, effective partner to our institutional funding partners. Our funding partners increased to 32 in Q2, and we are in discussion with another 45 institutions with aims to further broaden partnerships for diversifying our funding resources while maintaining risk management excellency.
我们一直以来致力于为金融合作伙伴提供良好质量的客户，这为一级的长期增长奠定了坚实的基础。本季度我们恢复了营销，并加速获取优质的新客户，但有很大比例的贷款来自于高信用级别的重复借款人。我们本季度的重复借款率为 72.4%。我们相信为高质量的借款人提供服务，将有效确保我们的资产质量。同样，令人满意的财务业表现说明了我们在消费金融市场的实力和我们业务的增长潜力。我们将持续致力于通过优质的资产筛选能力和先进的技术能力服务更好的金融合作伙伴。
Our ability to provide assets with qualified risk profile that meets risk requirements for respective funding partners lay a solid foundation for higher loan origination. In this quarter, we resumed the marketing and began attracting new borrowers at a more accelerated pace, with focus maintained for higher quality borrowers. A large portion of our loan volume continued to go to our existing borrowers with higher quality, with our repeat borrowing rate for this quarter at 72.4%. We believe serving higher quality borrowers will improve our credit risk profile and ensure the asset quality. We are very pleased with the progress, and the excellent financial results illustrate the strength in the consumer market and the growth trajectory of our business. We remain dedicated to controlling credit quality with our improved credit scoring system and advanced technology capabilities.
在海外市场方面，由于德尔塔变异病毒所带来的潜在影响以及市场竞争的加剧，我们在市场拓展以及运营上采取了更为谨慎的做法。尼日利亚、印度尼西亚和墨西哥是我们的主要海外市场，具有良好的商业潜力。我们在这些市场的进展是渐进和稳定的。目前，我们正在寻找投资和风险之间的平衡点。我们预计在今年年底情况会更好，这取决于地缘政治、病毒控制以及全球货币政策的变化。敏捷性和审慎都是我们商业战略中的关键因素。这将使我们在不断变化的市场环境中更加具有弹性，并取得更大的成功。
In terms of the overseas markets, we are taking a more prudent approach with uncertainties brought by the surge of the Delta variant and the margin dilution by heightened competition. Nigeria, Indonesia, and Mexico are our key overseas markets that present promising business potentials, with our progress in this market gradual and steady. We are striving for a good balance between the investments and the risks. We expect to have a better picture later this year, depending on geopolitical changes, virus control and improvement, and global monetary policy changes. Agility and prudency are both critical factors in our business strategy, which will enable us to emerge stronger and achieve more success in the evolving market environment.
本季度我们完成了与 BV 的整合。大家知道，近期国家出台政策宣布打击比特币挖矿，这无疑影响了市场的情绪，并且给目前比特币挖矿带来了暂时的挑战。但是 BV 主要专注于区块链相关技术和去中心化应用的硬件解决方案。我们为客户提供云存储、云计算、带宽、CDN 等相关领域的暂时解决方案。随着基于区块链应用程序的快速发展，我们有信心凭借我们的先发优势和技术能力，从这个市场不断增长的市场中获益。
We completed the integration with Billnet this quarter. As you might be aware, the recent crackdown on Bitcoin mining in China has affected the market sentiment and brought temporary challenges to immediate mining prospects. However, Billnet is primarily focused on blockchain-related technologies and hardware solutions for decentralized applications. We provide our clients one-stop solutions related to cloud storage, cloud computing, network bandwidth, content delivery networks, and others. As blockchain-based applications are developing rapidly, We are confident we can benefit from this growing market with our first-mover advantages and technology capabilities.
由于中国市场的恢复性增长，我们本季度的运营和财务表现均令人满意。我们将继续优化我们的业务，推出更多增长策略和应用技术，以提高运营效率，为我们的股东创造长期可持续的价值。
In conclusion, we are excited over the resumed high growth in our domestic market with our record-breaking operational and financial performance this quarter. We will continue to roll out initiatives and apply technology across our business to improve operational efficiency and create long-term sustainable value for shareholders.
现在我将电话转交给我们的联合首席财务官 Celia 陈。Celia， 请继续。
With that, I will now turn the call over to our co-CFO, Celia Chen. Celia, please go ahead.
Thank you, Mr. Yan and Jiayin, and thank you everyone for joining our call today. As Mr. Yan mentioned, we achieved a milestone quarter and grew original volume by 153% to 5,663 million RMB, with 100.9% growth in revenue and 208.5% in net income.
This outstanding result came in well above the upper end of our guidance range on year-over-year basis, demonstrating the success of our business transformation as well as our speed and strong execution in enhancing our risk management and improving asset quality. Now let me go through our financial highlights for the quarter. Please note that unless stated otherwise, all numbers quoted are in RMB and percentage change refer to year-over-year comparison. Net revenue was 492.2 million RMB, up 100.9%. Revenue growth was primarily driven by the significant growth in loan origination volume, which increased 153%. Other revenue was 38.5 million RMB, down 8.3%. This decrease was primarily due to reduced revenue from P2P-related services, as the company no longer supports the legacy P2P lending business, partially offset by increased revenues generated from our overseas business and BRINet since the integration in May. Moving on to costs. We also had a substantial improvement in operating efficiency, reflecting actions we took over the last 2 years to streamline our expense base. In the second quarter, total operating costs and expenses were 342.6 million RMB, up 73.9% from 197 million RMB last year. The increase was along with our top line growth. However, total operating costs and expenses as percentage of revenue was 69.6% versus 80.4% in the same period last year, demonstrating our ability to contain expenses growth, which will enable our infrastructure to scale as we grow. Origination and servicing expenses were 83.2 million RMB, up 63.5%, primarily due to the increase in credit assessment expense resulting from higher loan origination volume. In this quarter, we incurred a cost of sales of 5 million RMB, which is equivalent to $0.8 million, compared with nil from the same period of 2020. The increase was primarily due to the cost of hardware sold by BRINet. Allowance for uncollectible receivables, contract assets, loan receivables, and others were 13 million RMB, up 21.5% from the same period of 2020. The increase was primarily due to an increase in loan principal and increase as a result of the higher loan origination volume from overseas business, partially offset by the decrease in the estimated default rate on the current business model, since we no longer support the legacy P2P lending business. G&A expense was 35.2 million RMB, down 3.8%, primarily due to the decrease in headcount
of which has been partially offset by the increase in personnel-related costs allocated to General and Administration Department. R&D expense was 31.9 million RMB, down 6.5%. This was primarily due to the improved utilization of our facility allocating to Research and Development Department, of which has been partially offset by the increase in professional service expenses as the company continues to enhance the research and development capabilities. Sales and marketing expense were RMB 174.2 million RMB, up 169.7%, primarily due to our new online advertisement and marketing strategy, which has resulted in higher customer acquisition expenses. As we intend to continuously grow origination volumes, we began attracting new customers at a more accelerated pace with our superior marketing algorithm and translating them into our loyal customer base. We achieved a noteworthy profitability through our loan volume growth and improved operating efficiency. With a healthy net income of 126.8 million RMB, up 208.5% year-over-year. We ended this quarter with 141.4 million RMB cash and cash equivalents, compared with 123.3 million RMB as of March 31st, 2021. Moving to our guidance, we expect our loan origination volume of 27 billion RMB to 30 billion RMB for the full year 2021, representing 133% to 159% year-over-year growth. With that, we can open the call for questions. Mr. Yan, our Chief Risk Officer, Mr. Xu, and I will answer questions. Operator, please go ahead.
Certainly. Ladies and gentlemen, to ask a question, you will need to press star 1 on the telephone. To withdraw your question, please press the pound or hash key. Please stand by while we compile the Q&A roster. Once again, to ask a question, it's star 1 on your telephone. The first question comes from the line of Greg Irwin from Roth Capital Partners. Please go ahead.
Hello, and thank you for taking my questions. The most exciting number that you shared, I think, was the origination volume with more than 5.6 billion RMB in the quarter. Can you talk a little bit about the contribution of new customers added in the past couple months, and how quickly your funding partners contribute to these very high growth rates? Do we see a larger portion added on the front end as new partners are added, or do the new partners tend to accelerate over time?
This is Yifang. Thanks, Greg, for your question. I'll take a stab on addressing your question. So yes, as you have seen in this Q2, we're seeing significant amount of volume increase over the time. As we have disclosed in our notes early, the number of the funding partners we're working with have increased to 32. We are a lot more diverse in terms of the type of FIs we are working with, as well as the numbers are increasing as well. And we are seeing on both factors have impacting coming from bringing on new funding partners and deepening relationships with our existing previous that we have the partners that we have previously brought on board last year also. so that we are managing our FI partnerships, within a mixed several factors in consideration that we have to take into consideration of the regulatory changes over the time. So diversification is one of the crucial components for us to managing that, for us to be able to achieve a stable supply of the funds. Now we have added different aspects in terms of the geographical compatibility of our borrowers' profile, because we are seeing some local, regional requirements in terms of the type of customers some of FIs are requiring and specifying. And lastly, is also important, is to continue to improve our overall economics and to achieve higher low competitive cost of funds. We have to manage to have a wide range of and also a good number of partners that we are working with to balance out in terms of our business terms. Hope that answers your question.
Yes, it does. Thank you. So my next question is obviously directly related to your increased marketing spend to drive this accelerating origination volume. The marketing spend was up materially quarter over quarter, and it's amazing that you had such very quick results. I'm going to guess that that's typically more play between the marketing spend and the new loan origination with the customers captured. Can you please describe that process and maybe share some of the details of where you're spending these increased marketing money? And if you could also discuss how your budget on the total marketing spend, are you targeting 30% operating margins, or are you targeting a particular expense level as you continue to scale the business?
Yes, this is Yifang again. I'm going to speak into the first part of your question, and then maybe Celia can chime on the last question. So that yes, we are seeing that a higher increase of our marketing expense, which is even on the per unit basis, we are maybe looking at a higher sales and marketing per customers acquired. A couple of reasons going into why we are seeing a higher cost on that item. One is we are continuing to really focusing on the better quality customers, and in the market that we are working on right now, the current market landscape, the cost of acquiring such customers is significantly higher than compared to what we are seeing in probably 2019 or to the early 2020s. The channel also has significantly changed compared to the early years as well. So today we no longer see the kind of low mark type of market practice. We are actually acquiring our customers through the direct channel a lot more, working with the major internet companies to acquire through the what we call the information stream to get to acquire customers directly. We are seeing almost 100% growth in those new channels, and the cost in the new channels are higher, but the qualities are significantly better in terms of those approval rates as well as from the early risk readings we are seeing. So that's primary. We are seeing the channel mix is shifting to a higher cost channel, and our focus on better quality customers are also driving the per unit costs up. And I think from the planning perspective, we're still thinking that we are still considering this is a healthy organic growth, considering that we are pre-planning for the future, especially considering the continuous the trend on the interest rates. The type of requirements that we are seeing from our financial institution partners in terms of the loan interest rates we have to work with. And we are putting a stringent view on our risk spectrum to making sure that we are not compromising or being more tied on the sales marketing per unit cost, but in exchange for a higher future risk uncertainty. So we are balancing that, trying to stay on to keep our growth for a future more healthy growth, to target better risk quality customers. And in trading, some cost increase at this point in the current cost from a current cost point of view. So I think I talked a little bit about higher growth in some of the high cost segments, channel segments. At the same time, we are seeing that sales and marketing costs per unit costs are coming down, driving down. In the Q3, we have pretty good line of sight of having probably 20 to 30% of efficiency improvement in the pipeline right now. And as we are seeing the continued growth on such high quality customer channels, and our ability to managing that per unit cost down, we are definitely in a good position in terms of the economics point of view. In terms of total budget, I'd like to ask Celia to comment on that.
Yeah. So this is Celia. Thanks, Craig, for the question. I think this quarter sales and marketing expenses with last quarter, we've seen like over 90% of the increase. I think it's to add more colors on this. I think it's mainly due to two reasons. The first is that the fee settlement way is different from previous, because in the traditional or in the previous way, this compared with the traditional way, this quarter we started to launch the information feed advertisements. And for this new kind of development marketing strategy, the fee booking ways is totally different with the previous ways. In previous ways, we record the fees based on the performance, that is the CPD, cost per download, or CPS, cost per sales. But for this information feed advertisement, we record the marketing expense upfront. That means we record it in the CPC or CPM way, which is short for click for cost per click or cost per millers way. So you will see that at the initial stage that we launched this kind of marketing strategy, there will be a bump, or you will see a significant increase in the sales and the marketing increase. That is probably the major reason that you see that our sales and marketing expense outpace the loan origination volume growth pace. And the second, I think that is a basic a new strategy, new marketing strategy launching logic, is that we started to partner with our channel providers, and we co-build the models with them, and we do some trial runs to try some marketing strategies, and we get numbers from the channel partners, and we go back to optimize our algorithm and improve our marketing strategy, launching strategy. So at the initial stage, I would say it's the cost per newly acquired customers will be inevitably higher than usual. So at the initial stage, I would say, especially this quarter, the first quarter that we launched this new marketing strategy,
it's inevitably to see a significant rise in the sales and marketing expense. But in the future, I would say we expect to see some room for the improvement in the cost effectiveness. I think in the future, there are so many like optimization of the marketing strategy right now are going on. I'm not the expert in this, but I'm pretty sure our technology team spend a lot of great efforts on this to improve the cost per newly acquired customer, the data on this. So I would expect that in the next quarter or in a couple of a few months, the cost effectiveness will be improved, and the cost per like newly acquired customer will be drive down. And for the
Understood.
I think because there are a lot of moving parts at this quarter, at this initial stage of launching this marketing strategy, we will not set a specific number or like absolute number for the marketing and the sales expenses, or to set the ratios of these expenses, the ratios of the total loan origination volumes. But we are confident that in the future, in the short term, it's not like that unlikely that these marketing sales expenses would outpace our loan origination volume growth a lot. That would be all.
Thank you. So can you share a little bit more detail around your international expansion, an update on Indonesia and Mexico, and whether or not you're considering other markets internationally at this time?
Certainly. I will take on this question too. So as we said, that we remain optimistic and consider that international strategy is one of our key components of our strategy. But we are taking a prudent approach in terms of how we're considering these the overall component of the international market expansion effort. So there are different set of risk factors and uncertainties when we are managing the national market. As we have mentioned earlier, the surge of the Delta variant is having bigger impact in the emerging markets, which are slightly different from what we are seeing in mainland China market. And the economic growth and the political or regulatory stability is also somewhat more fluctuated compared to our mainland China market. So we are kind of managing those risk factors compared to the growth needs and the economic needs from a business standpoint of view. But we're still happy to report in Mexico we maintain to be the top tier player in the market. In spite of we are seeing a probably influx of new players coming into the market occasionally, or in certain months we are seeing them driving the marketing costs up, which have some sort of impact on our economics, but we are still maintained to be the top player in the market now. And then Nigeria, we have gone through the setting up phase of that market. We have obtained our money lending license. For the next step is really for us to start to drive the growth in the market. In the Indonesia market, we are seeing some recent regulatory changes related to how they're managing the license application process. We are seeing some and such change does have somewhat impact on us. We are still continuing trying to sort that out. Just continue to go in, but we are still dedicated to the Indonesia market. As far as the newer markets, and there are a couple of new markets, we are in they're in investigation and in the early feasibility study phase. But I have to say that most recent political change that may have some impact on our speed and our appetite in taking on new markets at this point.
Thank you. Thank you for the update, and congratulations on the really strong growth and profitability in the quarter.
Thank you.
Thank you. Once again, ladies and gentlemen, to ask a question, please press star 1 on your telephone. Thank you.
Okay. Thank you, operator, and thank you all for participating on today's call, and thank you for your support. We appreciate your interest and look forward to reporting to you again next quarter on our progress.
Thank you. That concludes our conference for today. Thank you for your participation. You may all disconnect your lines now. Thank you.